Okay, guys, we're going to have a look at the Vanguard. We're going to just do an update this week. There's not a great deal going on in the news because obviously we're going into the summer period and politically wise, well, it just calms down. Although we do have something on the horizon that I think we need to sort of address and be prepared for. Now, there's word that capital gains is going to come more in line with income tax than it is in its current levy. Now, it used to have capital gains was around 12,500 you could have before you paid. Then it was reduced to 3,000, and then you pay a tax over and above that 3,000 on your interest. So if you've got a standard savings account outside of the ISA, you would pay some form of capital gains. If you do stocks and shares, you would pay capital gains on the point of selling it, all of that sort of thing. Now, if they start tinkering with this and moving it up in line with your income tax, that means you could, depending on your tax bracket, pay anywhere up to 40% on your interest earned. Now, when I show you my figures, that would be a sizable chunk of money. So this is the state of affair where I'm at up to now. Now, this week, and a lot can change in a week with one of these, from the last data check, it's grown 1.4% this week. So it's a change of like 3,272. However, I've put money into this personally. So, I mean, the personal money I've put into it this week is 2,070 here. So it's this lot cumulative. So that's what I've put into it this week. So it's still grown quite a bit on its own. But if capital gains comes into it, that growth would be pretty much wiped out. So it's a bit of a worry. I'm not sure one of the best ways to do it at the moment. I need to explore that a little bit more. Obviously, I use my ISA because it's tax-free regardless. You do use your pension. You get a tax credit on going into pension. This is for the UK, guys, by the way. My ISA is tax-free. So I use the full allowance each year. I've got that filled up, so I'll get the full whack and benefit for the year. Next year, there is ISA changes, as we know. It's 12,000 cash, 8,000 stocks and shares, or 20,000 stocks and shares, as long as you're under 65. If you're over 65, there's no real changes, to be honest. So let's have a look at the real account. This is just my spreadsheet. I just knock it together so I can keep a rough idea very quickly of what's going on. But the proof in the pudding is here. Okay, so let's flick it over. So there we are. It's currently sitting at 233,722. I'm very, very pleased with that. It's grown quite a bit over the last couple of years. Because one of the things you've got to remember with trading is, investing rather, you snowball. In the beginning, it's very small. And a lot of the time, people will just sort of go, well, it's not growing anything. I'm not bothered with it anymore. But what they forget is, once it's built its pot, then it starts making money. I mean, currently this is running over the last year, just in the investments return, 36,777. But a few years ago, that would be next to nothing. So it took time to get it in, but once it's in, it'll build and snowball. So I'm quite happy with the way that's gone. I mean, all right, the equity curve's dropping off a little bit at the moment. I'm not overly worried. I'm going to rebalance this, or start to rebalance this next year. And I may be moving a lot of it over into safer bonds, simply because of my age, and I'll probably be looking to use this for other things when I'm 60. Well, I'm 56 now, and it'll take about 3 years to unwind it into safe areas. I'll just see how that goes. But at the moment, I think the equity curve's pretty good. The year's performance has been superb. So a rolling year ago, it had 121,000 in it, which even that I was outstanding with. But now look where it is within a year. Yes, I'm working my nuts off and I'm trying to get as much in as I can before I decide to retire. But the proof is in the pudding. If you put the work in, you'll get rewarded for it. Now, month on month, it's not always a bed of roses. I mean, here we are at the beginning of this month. Even though I've put money into it, a lot of money, it's still actually lost money this month. But I'm not too fussed. I mean, we're 4 days in and it's down the thick end of 700 quid. So it's down substantially if you look at it that way. But in reality, look at the way it performs. It often does lose every once in a while. Lost a colossal amount here. But then it rebounded with some. So don't be frightened of red marks. It's just nature of what it is. I mean, I can take this back another year and you'll see some horrendous red marks. So if we go back to what, July 24? So, yeah, there we go. So we'll go back to July 24. Oh, what have I done here? Is that right? 26. July. Oh, dropped a bollock there, boys and girls. Do that again. Right. July 24. There we go. That's better. It helps if you actually tell it to start. What a silly Billy. Silly Billy. Okay. So, 2 years ago, it's 84,000. All right. And you just think, oh, bloody hell. All right. But look at this when we go down. Red marks, quite a few. Horrendous set of red marks all together, again and again. And look at the growths. The growths were relatively small, but it's now starting to accelerate. And it's doing very well. Transactions-wise, just drip in. I just drip into it all the time. 7 quid, 6 quid, 6.52. All the time. Just constantly drip feed in. If you've got a bit of money, drop it in and it'll be fine. It'll pay off. But what I'm driving at is, if you think of it like sort of 6 quid, which is there, normally what I do, I'm a little bit odd in the sense that I save the change in my account. Like if you've got 20p as a figure. I like round numbers, so I'll sweep the 20p's into a bank account, a little savings account. It does it automatically for me on my account. And every time I see a fiver or a tenner, I just pay it into here. And at the end of the month, sometimes it all sort of nips up. I use things like cashback on Quidco or cashback on my credit cards. And the money I get back, I just dump in there. So it's constantly getting fed. But as you see, it's getting fed with like 6 quid. It's not a lot. But over a long period of time, it adds up. And those adding up pays off with a big lump sum. And then when you come to later in life, I mean, sort of now, I'm enjoying life at the moment. I travel a lot. And it all comes from this, and that's it. That's all you've got to do. Just drip feed in constantly, but also be well aware of the bigger picture, which I am with the taxation. And I'll have to think of other vehicles and wrappers that if they are going to tax and take it all off me, I'll just spend it. I might as well, because what's the point? If they're taking it off me, what's the point? I'll just look to do something else with it. Anyway, but at the moment, I'm quite happy. The milestone I'm looking for at the moment is 235. I'd like to get to that relatively soon. The goal I set for the entire year was 200,000. If I got to 200,000, I would have been more than happy. But we're smashing it at the moment. So I'm riding the wave of the stock market being high, but I am aware that it could drop. So I'll start looking to move it over into safer funds. But at the moment, it's fine. I use global stocks, so it's not that badly affected. But at the same time, I'd rather be safe than sorry. Anyway, that's it for this week. See you all in the next one.